All right, guys, and let's watch the reaction here. Data should be dropping any second now. All right, we're seeing a bit of a reaction here so far. The dollar index is slightly higher. S&P pulling back, NASDAQ pulling back, Euro, Pound pulling back, the US 30. Gold is down, just lost about $15 an ounce on that move. Oil continuing to chug lower, pound dollar lower, S&P, NASDAQ, both of these coming in lower. Wow, we got the hot data. Somebody said 353K. Wow, look at this. My conspiracy theory was right, guys. Clip that, Chandler. That is going into the socials. The conspiracy theory was right. Okay, yeah, that is a hot print. Wow. We just got 353K. Average hourly earnings came out way hotter than expected. Unemployment rate came down. People were expecting it to go up. Oh my goodness. That is a huge change in mindset. Now you might hear I'm a little excited. You know exactly where I'm going with this. Come on, baby. Give me a chance. I've been wanting to buy the NASDAQ on a pullback, the S&P, even the Dow maybe. But look at the dollar. The conspiracy theory was right. If you guys heard me say my conspiracy theory yesterday, I pointed out that I think that Jerome Powell sounded in his speech like March rate cuts really weren't coming. I read that as maybe the jobs data comes out strong, and that's really what they're pointing at. Well, there it is, guys. You couldn't ask for a stronger read. 353K. Every area that we look at showed us dollar strength here and pushing back on interest rate cuts. Wow. Wow, wow, wow. That's crazy. Yeah, I mean, I gotta say, I predicted it, but not really. When I said that conspiracy theory, I was kind of saying it as a joke, but it looks like it was not a joke. It looks like we really got some hot data, and that throws a loop into things, guys. Wow, 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 wow. Fundamentals, man, I'm telling you. Do not sleep on fundamentals. Do not sleep on them. Now you might say, well, Nick, if you're so good at this stuff, why are you so surprised you're right? It's because I didn't actually know, right? I was saying that was my speculation after listening to Jerome Powell. Maybe the jobs data comes in hot. To claim I knew that this was going to happen is kind of a joke. But here's the thing. This is something we can now go with and take a look at markets and we can say, okay, what does this leave us with? Well, the dollar index is probably going to scream on the Edge Finder today. It's gonna scream and howl because this data is about to come in as like a big check mark for dollar bullishness. And we had FOMC that was arguably less dovish than what the Fed was expected to be. I think the dollar moves higher from here. We'll see if that's correct. What I'd be looking for would be a breakout of these highs. Again, that's a big ask because this range has been very, very, troublesome for both bulls and bears. But remember what I was saying just moments ago. Don't count the dollar out until it breaks this range. And that goes for both cases. If this reverses and we trade back under this, I've been clear that I will be the first one to say I'm wrong and, be aware of that. But so far this week, we have been very spot on with what we were expecting. And it was not always the consensus. We weren't just, just expecting the consensus as everyone else. We were pointing out that we think we're going to see a less dovish Fed. Frank and I ranted on that consistently. We got that one right. And then for fun, I threw out my conspiracy theory, which again, we will be clipping and bragging about all day long. I'll probably put in my videos, brag about it. So I apologize in advance if I'm a little bit obnoxious, but that was kind of cool to see. So anyways, yes, the dollar index here flying high off of what has been a pretty gosh darn hot labor read. Higher than expected. More people got hired, right? More people got hired than what was expected. They revised the previous up. Whoa, I didn't even catch that the first time. How did I not see that? They revised they revised that from 216K. We got like 100 here, let's say 150 here. We got like 250,000 extra jobs accounted for on this filing. That's crazy. And you got average hourly earnings. So people got wage increases. We got more people getting hired. Unemployment rate is lower, and people are arguing for a March rate cut. I'm feeling vindicated right now. Yes. What a move. Beautiful, beautiful dollar pushing higher here. And again, I mean, how do you jump in front of that? That's just a strong labor market read.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
On GBP, the market is still on a very nice uptrend, you see. So I think we will see this type of a reversal, but maybe around this support area, we might start to see the market pushing to the upside. I think looking further, that will actually we will start to actually add like interest rates. We know that they did not really go well or the way we thought, but along the way, they're still going to cut the rates, and that is actually good, but bad for the dollar. So this might be a short period. This will just happen now. I don't think this will change the trend. So the market will actually react positively for the dollar for now, but I don't really see any change of the trend. I don't think dollar will be stronger for the next week or 2 weeks. Only now this one spike, I don't see it breaking here. I might be wrong. Next week we will be here. We will see if maybe I will be right or wrong.
Sure. Yeah, no, well said there, Kenzo. And again, I think you brought up a good point because, this week we also heard from the Bank of England, and the Bank of England sounded a little bit more hawkish than some people might have expected. They do something where I'm sure you've probably seen or heard this before, but for the audience, the Bank of England, they vote. There's like 9 people on their committee there that vote on where they think that what they should do next with rates. And you know what? I'm going to pull that up so that I'm not just speaking off the top of my head. Let me actually look at this. Okay, so Bank of England, right? When you're talking about the pound US dollar, here's what we thought was going to happen. We thought we were going to get, I believe this is hold on, let me just make sure. So the first number is how many MPC members voted to increase rates. The second number is how many voted to decrease rates. And the third is hold. So increase, decrease, hold. So on this one here, we were expected to see 2 people say increase, 0 people say decrease, and 7 people to say hold. What we got instead was 2 people said increase, 1 person said decrease, and 6 people said hold. Actually, I said that wrong. Perhaps they were a little bit more dovish than expected. However, the Bank of England is expected to cut rates. The ECB is expected to cut rates. So I guess the question, if you're a currency trader here today, is who is actually going to be the first one to cut rates? And I guess part of the reason here for this move lower on things like euro dollar, pound dollar, is because now, with that labor market coming in so strong, I guess the possibilities or the when that rate cut's going to happen in the US might have just got pushed back a little bit. However, we may, like you're pointing out, maybe next week we hear something from the ECB that says, hey, we're still seeing, a serious concern about, inflation overall, and it could change the story again.
I saw it was pushing up, but I think it's because they were talking about dividends. I think it's the first time they are going to have dividends, and that's great for a tech company. So obviously that is a good thing. So I saw it was pushing up, but I never saw the numbers. I just heard they were just talking about the dividends and stuff.
Well, they had numbers. They had, they released their dividend, all sorts of stuff here, and the market just went crazy with it. The Nasdaq tried to push back. You know, it's just a testament. You know, I know we don't talk individual
Oh,
stocks too often, but I mean, it was up. I mean, at this point, it's up like
yes.
17%, and just a crazy,
Wow.
crazy move. Same thing with Amazon. Amazon also, I think it was up 6% the last time I looked at it. Yep, there goes 6% on the day. And these are big companies, and they really, you know, as crazy, you know, we're talking about this leadership concept of, you know, the U.S. leading, you know, a lot of their Western allies. You know, in the
Yes.
stock market world, if you're trading indices, these companies lead your indices big time. You know, these are
Very
major
structured.
weight. Yeah.
Wow, that's great. That's crazy. So I think after this effect of NFP, we will see some serious move. I think we're gonna see some serious move. Yesterday we also had some very nice push to the upside. Now it's reversing. So for us, it was quite easy to see this. But the positive side that we see from tech stock, that is great. I think Nasdaq did not really react to that. I think that is still coming.
Yeah.
So maybe next week we will see some proper moves, and that is the first thing that I'm still expecting. But whatever that Meta platform did, I think it's the first time, right, for tech stock.
First time they're releasing a dividend. Yes, that has been a unprecedented, and just goes to show that company has so much money. They've already been doing share buybacks, which means they buy their own company shares to
Yes, yes,
enrich
yes.
their investors. Now they're offering a dividend. That's just how much money that company is making. What a remarkable company. And Kenzo, I have to tell you this. This is my painful story about Meta. I bought it. You could not have bought it at a better time. I literally bought at like $100 a share, and I sold it
Yes.
last
Wow.
year, like here. So I left so much on the table here, and I'm definitely kicking myself over that. However, you
Yeah,
know,
but you did eat
that's
there.
a
I think you
shareholder.
did eat.
Yeah.
I think you did make something there, because from where you're showing me to that point, it's like double what happened now. From where you stopped to now, it's actually the double the price,
Yeah.
especially when it was struggling. You remember when they lost 20 billion within
Yes.
48 hours? Or yeah, that was crazy also. So, and it's recovering aggressively. That's that.
Yeah.
This is actually good.
Yeah. No.
I
And
think
and
sometimes
again,
we should talk about these stocks, because when you trade Nasdaq or US30, you actually trade in the stocks. So
yes.
sometimes we can pick the ones that they are performing very well, then we can just check them.
I was so ready to buy the Nasdaq finally, and we
Mm.
just reversed. And it was those great earnings out of Meta, Amazon. Apple was kind of lackluster, but I think we actually, I could be wrong, but I believe Apple beat on revenue for the first time. The point is, we saw some huge moves back up, so I felt a little bit left behind. But with this data, I am feeling okay that we still may get another shot on the Nasdaq and the S&P. If you know, again, I don't this really does contribute to that, you know, March rate cut kind of being pushed off the table a little bit further. I mean, there's clearly some real you know, strength in the labor market. And the big one for me, Ivan, is that wage growth and unemployment rate both were stronger than what was expected. I mean, what do you make of these numbers? What sticks out to you the most?
The volatility in the NFP numbers, because in my books there is like 50,000 more higher or more. It's like that will make a big move in the market. So today we have, if my head math is correct, 170,000 difference.
Yeah.
It's a lot, and we have seen that, and I spoke to Joe the other day, another Joe, Joe Boss, and he said that what research should do now is, yes, we had volatility in NFP number, but then there has been record high revisions.
Yeah.
So not only are we off, not only is the volatility in the actual number, but also the actual number might actually not be what it actually was, because it's revised the next the next month. So, and that has a lot of volatility. And so what we know, because NFP is calculated out of a pool and then magnified, and once it start doing more digging, they find, oh, it was a bit different. So in a sense that I don't know if we can trust NFP number anymore.
Yeah.
I want to put that uncertainty out there, but nevertheless, this does not support anywhere close to rate cuts in March. March rate cut is dead as, I don't know, dead as a cat, but it's a dead fish in the water.
Yeah, it's having a tough day for sure.
Yeah. So, and then I've also seen in social media lately, oh, there has been layoffs, or there is many companies now saying they have record profits, but they are laying off a lot of stuff like IBM and stuff. So, but that's not there right now. So I'm a bit in shock, I guess, because I'm fed with one type of information, and then the actual numbers are completely opposite.
Sure. Yeah, and I think a lot of the layoffs that I've been hearing, just sort of anecdotally, a lot of them are tech stocks, tech companies, and of course, tech is all about automation, and so that there's inevitably going to be some job losses as tech continues to progress. It's kind of the craziness of it. It's like you helped us build this new technology and it replaced your job. It's like kind of a crazy concept. But yeah, I mean, I was curious, Ivan, what your thoughts are with some of these markets. What do you think about gold here? I mean, gold completely reacted, as expected, sold off hard. What do you think about gold from here?
I'm not going to be pessimistic. I have many comments to do here. One is it's extremely volatile. It's going from 2030 to 2065, and then back down again, 100% back down again. You need to be very good at your exits, both your entries and exits. This is not a time to be like I'm gonna YOLO it. And to me, I'm bullish on it. So I saw, nice yesterday, but it doesn't fit with the dollar bullishness. So to me, this is like, this is the standoff. And yet again, I just need for people to really know and really understand and really remember when I talk about the last push before the fall, that's another one of those end of the trend, and then they just drop on you. So when you see an acceleration in a trend all of a sudden, you should be very, very worried. Ball at 88, I have given you a shout out. I was happy for you yesterday, but today I'm happy for myself. Secondly, your dollar is not in a range or might be, but it's all about the future, and we have dollar strength coming in. We have euro weakness coming in, so I think we're gonna continue or breaking lower on the euro. So at least prepare for that, so we don't be left behind in confusion.
Yeah, fair enough. The euro looks interesting here, and as I'm looking at it, it's right on the cusp of possibly breaking through this low. So this is kind of interesting for those of you guys also watching the euro. You've got this level of support here today, and maybe it breaks it today, maybe it does not. But I would say that this number here today would justify, if it's going to break out, to me, a potential continuation. We'll see how that plays, but again, those numbers, that's a real catalyst. And I think that sentiment shift takes more than an hour. It can take several days even, if truly we are going to see, okay, March rate cuts are really off the table, and that kind of becomes ingrained in the market. Could take a few days to play out, and perhaps that's where you see breaks and continuations, and as on the technical side, we could actually look to possibly play it. Gold down 1%, silver down 2.5% almost. You have US oil down here today. Everything seems to be kind of retreating to be a little bit more risk off of this this day. Really, also look at yields flying high on the 10 and 2 year. What a wild move that is. And Ivan, what else other than euro dollar? Are you looking at any other charts, currency pairs, indices, commodities? What are you looking at?
Well, I went to bed with dollar yesterday, and I thought dollar bullish would be great. So I'm looking for any pullbacks going forward to next week. I am looking for dollar pullbacks on Aussie, Euro, Pound, New Zealand. I don't like USD CAD. So whatever. So this is great. I just want to push back a bit higher. so that I can sell at a better price for most likely next week, and that's probably going to be a trade for the entire week of next week.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.